Hello and welcome to my channel. In this video, we will be learning about KYC. This video is a part of playlist uploaded on banking system module. You can get the link to the playlist on the I button in the description box as well as at the end of this video. Now let's start with our PPT and understand and explore more about KYC. KYC stands for Know Your Customer. Do you know that RBI made it mandatory in 2002 for all financial companies and banks to collect KYC documents from the customers? Now this becomes very important to manage the risk which is involved in banks and financial companies because of large amount of transactions happening on daily basis and involvement of huge amount of money and customers trust in these financial companies as well as the banks. So whenever you as a customer, you are going to open your saving account, your current account, your demat account, you must have observed that bank is asking you for your Aadhaar, your PAN card, the bank statement. That is just to establish your identity proof, your address proof, whether what you are saying, what you are presenting is aligned with the documents that you are giving. So it becomes the bank's responsibility, and banks also have the right to impose restriction and make the account inactive for transaction if customers are not KYC compliant. So if you are not complying with the KYC norms, if you are refusing to provide the documents which is asked by the bank, then they have the whole right to make your account inactive. And you won't be able to conduct any financial transactions. So periodically also KYC needs to be updated whenever your bank or financial company is asking for the same. Now this is generally done to, as I said, to manage the risk involved. To avoid any kind of suspicious transaction, any kind of fraud that can happen. A very basic example is that whenever you are presenting any check, the bank officials always cross-check the signature, and after that only they do the transaction. After cross-checking the signature which have been updated in the system as provided by you and the check which is being given to do that particular transaction. So the signature is cross-checked and matched. After that only the transaction is done. This is just a basic example. Other than that, many other things are done on daily basis to avoid any kind of fraud happening in your account and to establish a good relation with the customer by managing their money in a proper way. So KYC is KYC is beneficial not just for the customers, also for the banks that they are able to manage the risk, and for the customers that again they would be on a more safer side related to their account, because customers are holding a large amount of money in their saving account, in their fixed deposit, and any kind of negligence can lead to loss of a huge amount of money which need not be done. And that's why KYC is the very first basic step that needs to be taken, and customers need to be following the instructions as given by the bank to safeguard their account, to safeguard their money. Now let's learn about the components of KYC. So what all are the components of KYC and how exactly it works? So the first one is customer acceptance policy. Second is customer identification program. Third is customer due diligence, and fourth is enhanced due diligence. So the whole KYC process has been bifurcated in these four terms. So first one is that whether a bank should accept you as a customer or not. So you can just read over here. CAP lays down explicit criteria for acceptance of customer. Banks are required to mention the exact criteria for a person to be accepted as customer. So if you want to do transactions with the bank, if you want to be a customer to the bank, you have to fill up the form as required by the bank. So, for example, when you are going to open your saving account with a bank, you are provided with an account opening form where you have to mention all the details related to you, whether it is your name, your date of birth, your address, your occupation details, all the details you have to fill in that form. You have to put your signatures. Along with that, you have to provide OVD, which is officially valid documents. For example, Aadhaar card, PAN card, you have to provide that. Then only you will be fitting in the criteria to be accepted as a customer. If you are refusing to do so, it means that there is some kind of what do we call, you are not trying to collaborate with the bank and the norms of the RBI which are led, and the bank can refuse to accept you as a customer if you are not complying with the same. So the first one is customer acceptance policy, that which particular customer can be accepted. Also, the bank tries to with the data that you have given, the occupation details and all, they try to establish that whether you are in something, whether you are doing business or salaried individual or retired individual, whatever is your source of income, it should be legal. You are not in any illegal business, and you are going to bank to be accepted as a customer. Bank has whole right to deny you. They have whole right to avoid opening your account. So the first criteria for any bank and financial company is whether they would be accepting a particular individual as customer or not. Second is customer identification program. Once the bank is okay that they are ready to accept you as a customer, they need to establish your identification. Now this identification again will be established only when you will be providing the details that has been asked by the bank. So in account opening form, the details that you have filled along with your photograph and the OVDs, the Aadhaar and the PAN card, whichever details are required by the banks. Once you have provided all these, banks will be able to identify the information related to you, whether it is your name, your date of birth, your address, and they would be providing you a unique number, which we also call as customer identification number or customer ID. So every bank will be providing you a unique identification number, so that on the basis of which they can extract all the data about you and can check whether it is in alignment with the details provided you or not. So a unique identification number is provided to you whenever you are opening the account, which is also known as Cust ID or customer ID. That all the information is collected by you to establish the identification of yours. Third process is customer due diligence. Now in this process, all of a customer's credentials are collected to verify their identity and evaluate their risk profile for suspicious account activity. Now first thing, what happened? The bank decided that whether you should be accepted as a customer or not, whether you are in any illegal business or anything like suspicious, bank has whole right to refuse to accept you as a customer, or if you are refusing to provide the documents. First, so when you are accepted as a customer, then bank has asked for your identification proof, which you have given in the form of account opening form, as well as your PAN card, Aadhaar card, your signature, your photograph, all you have provided. So on the basis of all that, your identification is established. Now what the bank is doing, they are verifying your identity and evaluating the risk profile. So there can be different level of risk. As an individual, if you are a salaried person, if you are doing a normal regular job, as compared to another individual which is in a political scenario, which is a politically exposed person, so the risk involved to that person who is in a political party or any such example will be carrying a huge risk as compared to the another individual which is in a normal regular salaried individual. So risk profile also depends on the kind of work that a particular customer is doing, which business a particular customer is. That also defines the risk. if a customer is having a regular source of income, or if the customer is having irregular source of income, if there are huge transactions involved, if there is a regular transaction that is happening on a daily basis or on monthly basis. So there is different kind of risk profile which is categorized. So customer due diligence, what exactly it is, on the basis of the data that you have provided to the bank, they will try to evaluate the risk involved in your account. So on the basis of the occupation of you are doing, on the basis of the transactions that is happening in your account, they will categorize you as a low risk individual, as a medium risk, or as a high risk. Enhanced due diligence is used for customers that are at a higher risk of infiltration, terrorism financing, or money laundering, and additional information collection is often necessary. So, in certain cases, banks can also ask for additional documents. If you are a reputed businessman, if you are a reputed celebrity, there is a huge amount of transactions involved in your particular account. So in that case, it becomes bank's responsibility to ask for additional informations, to collect more documents, so that any kind of terrorism financing, money laundering, or any kind of fraudulent activities can be kept away. So in certain cases where the profile of the customer is that of a politically exposed person, of that of a reputed businessman, a large businessman dealing with crores of transactions, there the risk is on a higher side. So for that reason, enhanced due diligence is conducted by the banks and financial companies. Now let's see about some of the officially valid documents. These we are talking about a saving account. If you are going to open a saving account, along with account opening form, you have to provide a proof of identity and the address. So it can be your Aadhaar card, voter ID card, a valid passport, driving license, job card by NREGA, utility bill, which can be electricity bill, and bank statements. So these documents help establish the identity and the address proof of the customer. In case of current account, it can differ. For a company, for a business, it can be the GST certificate, it can be the registration certificate, it can be IT return that is filed. So the documents can differ for current account for the companies or the business, but for saving account for individuals, these are the OVD, which we call as officially valid documents to establish your identity or the address proof. Let's talk about some of the objectives of KYC. So the first one, from understanding the customer, managing the risk involved in the transactions, prevent any kind of money laundering activities. So often what happens that many criminals, they try to use the accounts, they try to use certain customers' account to do fraudulent activities, to convert their illegal money into a legal source of money by making it go through the financial companies and the banks. By routing their illegal money through banks and financial companies, they try to make their money, their source of money, as a legal money. So to prevent any such kind of activity, to prevent any kind of money laundering, to prevent any kind of criminal activities, objective of KYC is the very first thing. KYC is the basic purpose, that is solving the issue. It helps preventing frauds and criminal activities, as we read. Transaction monitoring. So KYC also helps in monitoring the transactions which is being done in a customer's account. So for example, you have opened your account in bank and you are a salaried individual who is getting 40,000 per month. Now suddenly in your account, if transactions for huge amount is happening, like 5 lakhs, every few days the transaction related to 5 lakh rupees is happening in your account. So the bank get the alert that this particular account, the salary details which was given was only 30,000, and along with that all the details that you have provided and the past transactions which was happening was for a smaller amount. Why suddenly a certain large amount is being transacted in this particular account. So the bank may call you and ask you that whether these transactions are in line with your knowledge or not, whether you are aware about these transactions happening in your account, which we call as AML alerts or anti-money laundering alerts, which is provided to the banks and the financial companies, and it becomes responsibility of the bank to call the customer and ask that such a huge amount of transaction is happening in your account. Are you aware about it? Is it in align with your the business details that you gave, the salary details that you gave? If this transaction is happening, what exactly is the purpose? So these all things has been established in bank and financial companies to solve the issue of criminality, illegal things that are happening because the money is involved and huge risk is involved. Responsibilities of banks: documentation of relevant records related to all customers. So if the bank is collecting your information, if the bank is collecting your documents, it becomes responsibility of banks to keep all the records in a proper way, to keep the documentation of the relevant relevant details that was provided by you in one place, separated as per the customer. To be able to identify any unfavorable client or suspicious transaction, as I mentioned about the AML alert or anti-money laundering alert, which the bank gave, which the banks get. So they are also having the right to inform you and ask you about the same, to avoid any kind of suspicious transaction as such in future. Identify true identity of customer, understand source of funding, and monitor the customer's activities. So along with the identification, also understanding where the funding is coming from and monitoring the transactions also become the responsibilities of bank through KYC documents. Thank you for watching. I hope this video has provided you more insights about KYC or know your customer, why it is important for bank as well as you as a customer. So thank you so much.